Hello, everyone. Hello, welcome to another weekly analysis. So, the past week, the markets they were, it was turbulent. There was turbulence. So, we couldn't get in, as little as we used to. For example, like for the past 2 months, I think I've been trading at least like 4 times in a month. But this past week I've had like 4 trades. And it's for me it's too much. You see what I'm saying to you? Like for me, it's too much. If you're 4 trades in a week, it's too much. Depending on how you trade, though. If you're a scalper, if you're a day trader, it's understandable. But if you're a swing trader and you're willing to hold the trade for a long period of time, then I do think 4 trades in a week, is overdoing it. But moving forward, for this week we have 3 pairs. For this week we have 3 pairs rather. So Euro CHF is a pair that I'm currently, focusing on right now because it's bullish rather. So you need to understand that the market trends more. Sorry, the market trends less than it consolidates. You see what I'm saying to you? The market trends 40% of the time. So whenever you get a trade, whenever you find a pair that's doing well, going in the right direction, you should capitalize on it. You want to capitalize on every single pair or every single bearish or bullish run you see in the market. So for example, Euro CHF is quite bullish, lower low, lower high, lower low, lower high, lower low, higher high, higher low, because we refuse to break below this low. So we're obviously bullish. Now, in this case, we go down to the lower time frame on the weekly, the daily, the 4 hour. So, but on the weekly time frame, we can see that we were bearish on the weekly time frame. We're bearish lower low, lower high, lower low, lower high, lower low, lower high, and lower low. We became bullish immediately. We broke above, and then we broke the counter trend line like so. You know, we became bullish immediately. We cleared something like this. Yeah, exactly. Something like this. We became bullish when we cleared something like this. Broke structure, broke the counter trend line. Beautiful. Now we'll go on the daily time frame to look for areas, prices in the market where we can execute our trades from. You see what I'm saying to you? Prices in the market where we can execute our trades from, and that brings us into 0.96 thousand, 0.96 thousand rather. So we're able to capitalize on this push right here. Last week, I was able to take a trade on Euro CHF. Rather, yeah, I think last week I was able to capitalize on Euro CHF right here, and then we got in an entry, double bottom, double bottom, break of corner trend line. Everything looked good. You see what I'm saying to you? Everything looked good. You will see head and shoulder right here forming. Break of structure came to retest the left shoulder and then push at the upside. You see what I'm saying to you? So everything looked good. So we're expecting to continue. You see what I'm saying? We're not looking for sales. We're not looking for anything else. We're expecting to continue the buys, the buys, the buys. So I waited for a retest of this level. I waited for a retest of this level. Obviously, you can see a double bottom right here with a push, head and shoulders with a push. Whenever you see these things, you just know the market is about to move. You see what I'm saying? Whenever we see reversal patterns, double bottom with a push, head and shoulder, inverse head and shoulder rather with a push. Now, I am glad because I'm still in this trade, rather. I still have a position open around here. You know, I'm glad because we've put in a higher high. So now we're expecting the market to come and put in a higher low somewhere around here and then continue to push to the upside. But anyway, this is just an open pair. But for the week, for those who haven't gotten it, found an opportunity in the market yet, we can find an opportunity on USGJPY. Now, like I said before, the market doesn't trend every time. That's what I'm saying to you. But there are times in the market where it ranges, it ranges, or it could be in a mid-term reversal. The monthly time frame is bullish on USGJPY, meaning we're supposed to look for buys, right? But on the weekly, it's bearish. The daily is bearish. In this case, it's tradable. We can't trade it, but the only thing that has to change is your risk. If you're risking 2% before, now your risk has to come down to 1%. If you're risking 1% before, now your risk has to come down to 0.5, depending on how much you can handle. You see what I'm saying? So you can see right here where every time it became bearish rather here. It became bearish when we had this candle close. So bullish candle, bearish candle, bullish candle, bearish candle, bullish candle, obviously, bearish candle. So if you go all the way to the daily time frame, we see that we're having a beautiful structure. This is all that there is. If you want a beautiful structure, lower low, lower high, lower low, lower high, lower low, it's putting in lower high. It's putting in a lower high. Now all we have to do is wait for the 4 hour or the 1 hour to give us an entry. In this case, we need two things. I need to see at least two things. I need to see a reversal pattern, a shift of structure, or a break of trend line. Now, in this case, for our structure to shift, it has to come here, and we cannot wait. We need to execute, right? So, if you go on the 4 hour, which we are on right now, you can see that we need a break of counter trend line. That's one, and then we need a break of this this level right here, so we can give us a head and shoulder. So this is what we were looking for: break, then a retest of the trend line and retest of this left shoulder right here, possibly a head and shoulder, and then push to the downside. Now, immediately we get a break. Immediately we get a break. I will be executing with my stop with a sell limit. Immediately we get a break, I'll be executing with a sell limit, hoping that it's going to come back, to tag us in, and then, we get in a short position. You see what I'm saying to you? So stop losses will be right above the 50. So yeah, perfect. And then TP will be right here, and then entry will be right here. But it has to be a 2 to 1. You see what I'm saying to you? So I would very much execute my trades, with a 2 to 1. So say my entry will be right here, my limit will be right here, and then my take profit will be right here, my stop loss will be right here. Perfect. Now you need to understand that the way I'm saying it right now, it may not happen that way. You see what I'm saying to you? It may not happen that way. So we may also get something like this. You can see we may also get a double top, right? We may also get a double top, and then a break of the trend line. Now, when that happens, I'm going to execute immediately. You see what I'm saying to you? When that will happen, I'm going to execute immediately. But I cannot execute around here because it's not enough reward for me. You see what I'm saying to you? We need at least a 2 to 1 for every trade we execute. I need at least a 2 to 1. You see what I'm saying to you? So, like I said again, I'm going to be moving my limit in here, a sell limit, so it activates me in a 2 to 1 and then goes my direction. Now, why am I looking for a double top? Because it is a reversal signal. So I'm saying to you, it's a reversal signal. We've broken the counter trend line. We're good to go. We're good to go. So that's the plan for USD JPY. The next pair will be USD CHF. USD CHF has been good. I remember we got in a trade here. We made a lot of money here. We got out here. Now, excuse me. Now on USD CHF, it's the same thing. We rinse and what we repeat. We're not doing anything new. We're not doing anything new. We are bearish. We look for sales. We're not looking for buys. We're not looking to scalp. We're bearish. We look for sales. It may not give us opportunity we want in that particular week. Fine. Wait, patience. We sit on our hands. Zero trades. When you have your capital, that's still profit. What would you rather have? Minus 1% or break even? You see what I'm saying to you? So trust me, break even would make you feel a lot better. So you want to have your capital regardless. So moving forward, now if you remember, like I said before, on USGPY, we rinse and we repeat. I'm not going to form anything new. I'm not going to do anything new that you haven't seen in the past videos. Once again, a break of trend line. A break of trend line. Once again, a break of trend line. That's all that there is. A break of trend line. But if you go on the 1 hour, we have cleaner entries on the 1 hour. We have what cleaner entries on the 1 hour. Now we can see immediately we break the trend line and we break this support right here, this structure right here, will become bearish. I say again, immediately we break this trend line and we break this structure right here, will become bearish. Now we can execute. Now I don't need to set a limit like USGJPY. Why? Because if we execute from around here, stop loss is right above the shoulder, rather above the head, it's going to give us at least a 2 to 1 all the way to our TP. It's going to give us, this is our take profit right here. So you can see that's the 4 to 1. That's the 4 to 1, meaning if you're risking, say for example, $50, so $50 times 4. You see what I'm saying to you? 200. So just like that. That's how it is. It's risk management. You do not want to, risk $50 and then aim to get $50. The probability is what if it doesn't go in your direction. That's the probability. Then you lose $50. So it's not, so it doesn't worth it at the end of the day. But if you risk $50 to get a 4-1 and it doesn't go in, and it takes you out, fine, no problem. I know that at least I followed my rule. I followed my plan. And what do? I wait for the next trade. I don't go crying about it. I don't go, complicating issues for myself, wanting to revenge trade. I just wait for the next opportunity. That's all that there is. You see what I'm saying? To that's what all that there is. So all we need is a break of trend line and a break of support to tell us, okay, we are bearish, we're ready to go. Because the market has been giving us bulls, bulls, bulls all the way to the upside. Now the problem people get is this. You see, we've tapped, right? But we haven't broken structure. We've tapped. We've tapped, right? We've touched support where we're supposed to sell from. But you don't just execute in the market. You need something to happen. You need what? Something to what happen. You need to see a rejection. You need to see a bounce. You need to see a shift of structure. Immediately we break below here, then we have a shift of structure. You see what I'm saying to you? Then what? We have what? A shift of structure. And then we have the break of counter trend line to also support our claim. You need two and above confirmations. The same way you might have heard that your trend line must be 2 and above touches, the same way your confirmation for entry must be 2 and above. Just a trend line is not enough. You need support, you need structure. All of these things they are tested. Trust me, they are tested and they are true. If you want to find out for yourself by taking losses, fine. You have to anyway. It's a learning curve. It's a learning process. You have to take losses for yourself. There's something that's how you learn. You have to fail for yourself. That's how you learn. So moving forward on USD CHF, this is the plan. We're not doing anything different from what we just said about USD CHF. Are we? No. Sorry, USD JPY. No, we are not. It is the same plan. It is the same break of trend line, give us structure, shift of structure, the same take profit, the same everything. There's nothing different. You see what I'm saying to you? So why am I doing this? You need to be able to master a particular plan. That's all that there is. That's all trading is. Mastering. You need mastery. Mastery of a particular process, mastery of a particular plan, mastery of the one thing. You need to master the one thing. If I go about saying, okay, break of this, break of that, okay, this, that, no, or indicators, okay, break of the RSI, break of the, no, shark in the water, none of that. You need to master the one thing. If indicators, if an indicator is how you're going to execute in the market, then master the indicator. I'm not saying you should use indicators. We do not do that over here. It's not saying to you, but all I'm saying is master one thing. That's all that the trading is about, mastering one thing. Master a particular plan, master a particular analysis, master a particular entry, execute. You see, the problem with people is this: people suffer greed because when they get in the trade and it's going in their direction, they start saying, "Oh, I need more, I need more." Why? Because they do not know when to get out. It's something to you. They do not know what they did not plan rather when to get out in the market. So if you see here, I already know where my stop loss is going to be. You see what I'm saying to you? I already know where my stop loss is going to be even before the market opens. I already know where my stop loss should be rather. You see what I'm saying to you? I know where my take profits should be. So when I execute and it gets here, I'm not looking for anything more. I'm not looking for anything less. I take majority out and I let the rest run all the way to the downside. We're swing traders. I'm not day traders. You see what I'm saying to you? This is our target. This is our target. This is our overall target. Why? Because we use higher time frame. This is my overall target. We're in a ranging market. So this is my overall target. So when I get in a trade around here, first take profit is right here, right? I take 90% out of the market. I move my stop loss to break even. And I keep moving my stop loss to break to the last low, last low, last low as the market gives us strength, right? As it gives us structure rather. So this is my overall take profit. If I get in another trade around here, this is my overall take profit. Would I take majority? Yes. But the one that is left, the 0.01 that's left, the 0.02 that's left, this is where I'm going to take it out. That's how to make money in the market. Holding your trades for longer is how you make money in the market. Not getting in, getting out, not day trading. No, this is how you make money in the market. I know you see. I know what you see online. I know you see. What I'm saying to you. Yeah, it works, but it works until a particular period. The same thing to you. Trust me, there are things that work better than others. This works. You get me? This what works. So I urge you lot to like and subscribe. The same thing to you. Share the video, whatever you want to do. And I hope that you lot, have a blessed week. Trade wise, trade smart, use risk management. So God bless you. Thank you.